As we mentioned throughout multiple lessons, it's super important to designate responsibility to the respective parties. Here, we're going to talk more about the reliance on management representations. And during an audit, management makes many representations to the auditor, both oral and written, in response to specific inquiries or through the financial statements. This is going to be, right, while as an auditor, we are testing for the accuracy of the debt balance, for the accuracy of PP&E, for the existence of PP&E, we are also asking management, to your knowledge, are these account balances properly stated? To your knowledge, are there any transactions that could be considered fraudulent or in error? And management might say, yeah, we actually do think that our PP&E balance is misstated. Can you help us find where it is misstated? Right? And that's okay for them to say, like, we're working toward the same goal here. That is actually part of the audit documentation. Right? These specific inquiries, such representations from management are a part of audit evidence that the auditor obtains, but they are not a substitute for application of procedures. So while management says, yeah, everything's good, right? Well, we have professional skepticism. We're not trusting that they say the cash balance is correct, while we document that management takes responsibility and says that the cash balance is correct. We are also going to test cash as well. So a couple important points there, right? All of these inquiries, whether it's an email or you have a meeting with management, you take notes, obviously, get it in writing, get everything in writing. Don't just trust and say, oh yeah, we heard management say that everything's correct. Nope, get it down in writing. You are still going to do these testing procedures no matter what management says. Professional skepticism, keep that in mind because you want your reasonable basis for an opinion. And how do you get a reasonable basis for an opinion? You do your own work and you come to your own conclusions. Written representations from management ordinarily confirm representations explicitly or implicitly given to the auditor, indicate and document the continuing appropriateness of such representations, and reduce the possibility of misunderstanding concerning matters that are subject of the representations. That's important because we want to make sure that everyone is responsible for their particular part of the audit. The auditor is going to obtain these written representations from management to complement other auditing procedures. Again, we want to, now, like, here's where we'd see if management continually says that these account balances are correct and we continually find them wrong, that's going to go to our overall conclusion. It's going to kind of help us to assess the validity of management, how much we can really trust them. It's just part of documenting what we have as audit evidence. In many cases, the auditor applies auditing procedures specifically designed to obtain audit evidence concerning matters that are also subject of written representations, essentially saying that these are going to line up with each other. Whatever we're going to get as a written representation is what we're also going to test. Management's two biggest written representations are that they take responsibility for the accuracy of the financial statements and that internal controls are operating properly. As such, as the auditor, we're going to test the financial statements for their accuracy, and we're also going to obtain an understanding of internal controls. We're not going to fully test internal controls, right? That would be integrated audit, but we are going to perform tests of controls, get a general understanding of how they operate. For example, after the auditor performs procedures aimed at related parties, even if the results of those procedures indicate that transactions with related parties have been properly disclosed. So again, we've tested related parties. It seems that any transactions with related parties have been disclosed. The auditor should still obtain a written representation to document that management has no knowledge of any such transactions that have not been properly disclosed. In this case, we've done our testing, whether it's on disclosure of related parties, disclosure of going concern, the accuracy of the equity balance. We've done our testing, and then we also get a written representation from management saying everything else is properly disclosed. Anything else, right? We've disclosed everything. There are no issues. In some circumstances, audit evidence that can be obtained by the application of auditing procedures, such as substantive procedures, other than inquiry is limited. Therefore, the auditor obtains written representations to provide additional audit evidence. And what does that mean? Well, for example, if an entity plans to discontinue a line of business and the auditor is not able to obtain sufficient information through other procedures, such as examinations, inspections, to corroborate the plan or intent, the auditor obtains written representation to provide management intent on doing so. And here, in this example, there's really nothing you can do. If management says they are going to discontinue a line of business, and as such, that should be disclosed, there's not really much you can do. You can review the board minutes, see if it's talked about there. But if you think about it, there's not really anything you can do. I mean, you can see if they had meetings with business consultants on potentially discontinuing this line of business. You can see if there's been communications, but that would really just be inquiry, as it says here, other than inquiry. And in this case, really the best you can do is just obtain a written representation of management's intent, and then you just monitor it going forward. Because this could become a subsequent event. This could be something that applies to next year's audit, right? So at the end of the day, what it's saying here is if this is your best bet and you really have nothing else to go on, well, this might be the best option you have, is to just take that written representation, take management's representation. However, provide professional skepticism and test other things, maybe even more in depth then. If a representation made by management is contradicted by other audit evidence, we got a problem. Management, sorry, you said something and it turned out not to be true. The auditor should investigate the circumstances and consider the reliability of the representation made. We got to see, okay, we're not going to immediately accuse them of telling us something that was incorrect or lying to us, but we're going to look into it further, essentially. Based on the circumstances, the auditor should consider whether his or her reliance on management's representations relating to other aspects of the financial statements is appropriate and justified. As I said prior, right, if you are obtaining representations on these financial statement accounts and multiple seem to be incorrect, that could be indicative of more problems to come, right? And if let's say 3 out of 4 representations you've gotten are incorrect, they don't match up with what you've found out, then maybe you really can't trust any other ones going forward, and maybe you just, right, you're still going to collect them because you still want it documented what management says that they took responsibility and what they did for. However, you're really not going to be able to put any reliance at all. But if management attests correctly and they get, let's say, 10 out of 10, they say 5 accounts are perfect and they are perfect, and then 5 accounts are not perfect, and the auditor goes in and says, okay, yeah, they're not perfect, and we help the client to figure out how to fix that. Then if we've got 10 out of 10 accuracy and they're pointing everything out, we could likely rely on them a little bit. Again, we're not going to 100% rely on everything management says, because that's what we got to do. We got to do our jobs. We got to audit and perform our own procedures. We can only trust what we do, but that is something that we can consider.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.